PayPal and Affirm are two very interesting financial services companies. PayPal focuses on payments for e commerce platforms, while Affirm focuses more on buy now and pay later. It'll be interesting to see which one of these two is the better stock to buy for 2025. That's what I'm going to do in this video. Compare these two stocks across several critical financial metrics, including revenue, cash flow, return on invested capital, and the forward price to cash flow. And I'm going to reveal my discounted cash flow valuations for PayPal and Affirm. I've done discounted cash flow valuations already for these two companies. You may have seen them in other videos, but I'm going to allude to those calculations to make this decision on which one I think is the better investment for 2025. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Let's start with revenue growth over the previous 5 years, and a clear indication or a clear demonstration of better revenue growth we see from Affirm Holdings here. 41% revenue growth in the most recent quarter, with just 5.78% for PayPal. Notably, Affirm has experienced a surge of late in revenue growth. Its revenue growth was decelerating significantly up until early 2023, and then it experienced a rebound. PayPal has not yet experienced a similar rebound, even though macroeconomic factors are working in its favor, or it should be working in its favor. We haven't yet seen the results of that. What I mean by that is, and they should be working for both Affirm and PayPal. And what I mean by that is people are now spending more money online again. For a while there in 2023, people were spending a lot more money away from home. They were traveling more, going out to restaurants, bars, theme parks, concerts, movie theaters, etc., getting it out of their system, right? Because during the pandemic, they were spending so much time at home, people wanted to get out. And that was bad news for both Affirm and PayPal. They benefit when people spend money online. That's when its services are used more often. And you're seeing Affirm benefiting from that return to online shopping here in mid to late 2024. But PayPal not yet seeing that rebound, that acceleration in revenue growth as a result of that return to consumers shopping more online. Looking at cash flow from operations on a trailing 12-month period, the numbers are similar. PayPal at 24% and Affirm at 22%, but the trend favors Affirm significantly. You can see its cash flow from operations, even though it's been volatile since 2021, you can see a nice upward trend line here. You can draw from negative 20% all the way up to positive 20%. PayPal, meanwhile, the trend has actually been going against it from around 30% in 2016 down to 24% today, as more of its business is shifting towards its lower profitable segments, the segments that generate a lower margin and higher cost per transaction than what was happening in 2016, 2017. It wouldn't surprise me if a couple of years from now, Affirm surpasses PayPal meaningfully in this metric. All right, the next metric I wanted to look at is return on invested capital. And again, a similar story with PayPal having the better number at 14.6%, but Affirm demonstrating better progress, negative 4.93% with the return on invested capital. But you can see that big improvement from January of 22 up until the most recent trailing 12-month update. So Affirm demonstrating better growth, and you would expect that, right? Affirm is a relatively newer company, younger company than PayPal, which is a more mature company. PayPal is the one that's facing this competitive threat to its existing products and services, while Affirm is the one that's coming in and disrupting businesses like PayPal, taking market share, facilitating more transactions. And if you were to compare the benefits of PayPal and Affirm, it would be interesting, right? PayPal helps consumers and businesses because it makes it easier to make purchases, right? If you go on to a new website that you haven't used before, instead of having to take out your credit card and put in all your information one number at a time, which is a lot of numbers, You can just log into your PayPal and make the payment with your PayPal, as well as have better security because you're not putting your credit card information into numerous companies' websites, which can be exposed to hacks, etc. Right? So it does help consumers. It makes it incredibly more convenient. I shouldn't say incredibly more, but it just makes it more convenient to shop online. Affirm does the same thing, but for larger transactions where, if you're an individual and you want to buy something that's, let's say, $250 and you don't have $250, let's say you're a younger individual, you're 19 years old, and you want to buy the next gaming console or you want to buy a laptop for college and you don't have enough money to pay for it all up front, buy now, pay later helps facilitate that transaction where you might otherwise not be willing to do that. Now, PayPal can do the same thing, but Affirm is grabbing more partners and demonstrating better growth in this category than nearly every other player. All right, let's jump into valuation now. When measuring by the price to free cash flow, Affirm is more than four times as expensive as PayPal. It's trading at a price to free cash flow of 57, where PayPal is trading at a price to free cash flow of 13 and a half. Now, when I look at my discounted cash flow valuations for each of these two companies, I have the intrinsic value per share for Affirm at $81 when the market price is $69. But I had to make adjustments to the beta downward to arrive at this intrinsic value calculation. If I used the actual inputs available in the market, the beta would be much, much higher, and the intrinsic value per share would be much more lower. I talked about this on my video of doing this discounted cash flow valuation for a firm. If you want more details on that, please watch that video where I elaborate on why I made that adjustment. Now for PayPal, the intrinsic value per share is $123 according to my calculations, and the current market price is $90. And I didn't have to make as many adjustments to the numbers to arrive at this calculation for PayPal stock. And again, I have a video describing and going through step by step this discounted cash flow valuation for PayPal stock. I recommend you watch that if you're interested, as you probably are interested because you're watching this video comparing these two businesses. So, what's my conclusion? Which one of these is the better stock to buy? Let me start by saying I like both of these. I have each of them rated as a buy. So I like the prospects of each of these companies compared to their valuations, and they're very close. It's a very close decision. It's a tough decision. It's not a no-brainer where I would say I would pick one very easily. But right now, if I had to pick between these two and I couldn't have both, I would pick PayPal as the better stock to buy for 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.